I've been matchmaking all my life. I introduced my best friend and his wife. I introduced my program director, Kevin Drosch, to Inhala. And now I'm going to match you with Inhala. Yes, you two should sleep together. Skip the sleep center. Avoid the CPAP machine. Get in bed with Inhala. It's a custom-fit oral appliance. There's no bulky hoses or uncomfortable mask. Inhala works with your private medical insurance and makes the process seamless. I talked to the people at Inhala.com, and they're going to help you just like they helped out Kevin and his fiancée. She'll finally be able to sleep through the night while Kevin is using Inhala. Follow Kevin's sleep journey right here on 77 WABC. Now is the time for a treatment that is right for you. Visit Inhala.com or call 844-INHALA-1. That's 844-INHALA-1. So like my program director, Kevin, skip the sleep center, avoid the CPAP machine, get in bed with Inhala. Inhala.com, INHALA.com.
Ideal mesmo para o mundo atual seria fazer o ensino médio junto com o curso técnico, certo? É no Senac que o aluno tem autonomia de verdade, formação cidadã, foco na diversidade, preparação para o Enem, material didático sem taxas e muito mais. Na real, tem tudo que você precisa para se sentir preparado para a vida. Seja para entrar no mundo do trabalho ou te ajudar a decidir o que fazer na faculdade. Quer saber? Senac. Vem comigo. Acesse sp.senac.br/ensino-médio-técnico.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, folks. I'm Larry Kudlow. This is the Larry Kudlow Show, and you can listen to this radio broadcast live stream over the internet. LarryKudlowShow.com, LarryKudlowShow.com. And during the week, please join us, Fabulous Fox Business Network. The name of the show is Kudlow, 4 to 5 p.m. every day, Monday through Friday. And if for some reason you can't get to us at 4, why, please just text your favorite 9-year-old, and she will show you how to DVR the show. We are going to do some stock market work. And you know what? Stock market work is so much fun these days. So much fun. Best investment advice I can figure is sit back and enjoy it. I don't know. We got our two experts, Jim LaCamp, Senior Vice President Investments at Morgan Stanley, and we have Nancy Tengler, who is the CEO and CIO of Laffer Tengler Investments, and Nancy's latest book is The Women's Guide to Successful Investing. Welcome back, kids. I appreciate it very much. Nancy Tengler, the Trump trade, the Trump rally. The stock market likes the prospects for tax cuts and deregulation. And we could be entering into a golden era, and everything's going up. Even Bitcoin's going up. What do you make of this? It's the most fun I've ever seen.
It is fun, and thanks for having me back, Larry. Good to be on with Jim. Listen, I think a couple things. One is we've been drawing the analogy to the 90s, which was productivity-driven economic growth, with a Fed, by the way, that understood that and kept rates at a fairly high level to keep inflation at bay. I don't know that we have that now. But I think with the prospect of maybe 100% expensing coming back in the picture, we've seen CapEx decline as that number has gone down in the TCJA. And so if we could see that, some deregulation, and corporate tax cuts, I think we will continue to see earnings growth, which, by the way, was really good last quarter, and margin expansion from here with margins near historic highs. I think one of the things that caught my attention last week was one of our research providers, actually our friend Jason Trennert, published a piece about deregulation, and it just blew my mind. Financial services compliance officer employment is up 144% over the last 20 years. And financial services financial examiner employment's up 339%. You know, I run a small business. I know Jim has the same challenges I do, and deregulation is more than welcome in our shop.
Especially bank deregulation. You know, Jim LaCamp, it's a very interesting point Nancy's making. A point that Jamie Dimon has been making, that there's no reason for these new Basel Accords to kick in and force banks to accumulate even more capital. A lot of people think banks are already over-capitalized. They're not making loans. I mean, the loan stuff is just simmered down quite a bit, despite the fact that the economy is expanding. And then you get all this other stuff, various forms of DEI and ESG that the Biden influence on the Federal Reserve. And, Jay Powell has been really kind of a chicken on this stuff. That should all stop. Leave banks alone. They're in pretty decent shape. They're making money. Their stock prices, I'm looking at the KBW Bank Index. I guess this is the large banks. It's up 44% year to date. That's very cool. Total, let's see, the S&P 500 is up by 26% year to date, if I read it right. So banks are booming, and I think, they're looking forward to some deregulation.
They are. If you look at what Jamie Dimon said, and good to be on with both of you, but if you look at what Jamie Dimon said, he said that they were lending about 100 cents to the dollar that they brought in before the Biden administration, and that's winnowed all the way down to 65 cents. Oh. He said that bankers are dancing in the streets. Now, bear in mind, Jamie Dimon's a Democrat. So for him to be saying this kind of thing is pretty remarkable. And this morning, as I was filling out my forms that I have to submit to go to the bathroom, I was glad as well that deregulation is coming for our industry because it has gotten pretty ridiculous. Now, here's the thing. If it does open up lending, that is huge. Because mergers, acquisitions have been repressed, partly because of regulatory constraints, partly because of banking lending restraints, and then you've got private equity. All of these things have giant amounts in the pipelines that are just bursting at the seams, ready to capture animal spirits. But we have had an anti-business administration, and we've had interest rates that have been somewhat prohibitive. So that's the key to me. Everything is in place except the falling rates. And the Fed has cut rates, but market rates have not come down, and many are still, obviously the market is still worried about inflation and or runaway government spending. Trump has this new program, the Doge program with Elon and Vivek. Hopefully that works, but Trump was not exactly a spendthrift when he was in his first term. Yeah, I think they expanded by $7 trillion. So
excluding COVID, Trump was not a free spender. And by the way, his new budget director, OMB director, Russell Vought, who was the director for the last couple years of the first term, is a very tough-minded guy who's going to try hard to cut spending and work with Vivek and Elon Musk. By the way, bond yields, the 10-year note fell 23 basis points. That's down to 417.
Right.
As of yesterday.
Finally.
That's okay.
It's finally starting to move, and that would be huge because the market is also betting that we're going to work our way through these commercial real estate issues. We've got a lot of refinancing due over the next year, and it's incumbent on these rates to come down for that to play out. So I think that's another potential dark cloud, but right now it's animal spirits are on. Valuations be damned. I think Nancy named it or said it right when she said productivity could be a big player here with artificial intelligence, a key driver there. So right now I think you got to be in. All the charts are pointing up and to the right. A sixth grader would tell you that that's an uptrend, and I think you got to be playing.
By the way, Nancy, how much since November 5th, the Dow, I use the Dow, I know the S&P is broader, it's up over 2,000 points, 2,200 points?
Yeah, I was just pulling that up.
Some such thing. I was trying to bring it up on my screen, but I had to stop because the commercial ended. But it's been quite a run. I mean, 24 has been a good year for stocks. Now, Scott Besson, our new Treasury man, says that's because he's expecting Trump to win. There may be something to that. I don't know. but there's certainly something to it in the last couple of weeks. So this is what is today? Today's November 30th. The election was November 5th, so that's 25 days. Call it 3 weeks plus. That's a hell of a move. I mean, really, it's
10,000 points.
How much?
10,000. No, it's 10,000 points from a year ago. In the last month. This month, it's been about 2,000 points.
Right, that's what I thought. It's about 5 or 6%, I think, and something like that. Yeah. Hold on, I made a note of it. No, the Dow's up 7.5% in November. The S&P is up 5%. I mean, it has unbelievable momentum. I agree with you, up and to the right. I think that's 100%. Nancy, I think, honestly, when Trump is sworn in, I mean, he's got his cabinet in place very rapidly. You got Scott Bessent at Treasury, is a good man. Kevin Hassett's going to run my old job, NEC. As I said, Russell Vogt is going to run OMB. He's got a very good economic team there in place.
Yeah.
They're supply-siders. They're budget cutters. They're king dollar people. I mean, I think Bessent's a very interesting guy. We'll talk about it in the next segment with Charlie Gasparino and Steve Moore. But I don't know. I think the market has applauded not only Trump policies, but the Trump transition, Nancy.
Yeah, no, I agree, Larry. And I think, I know Jim commented on valuations be damned, but I actually don't think valuations are grossly out of whack. If you look at the S&P equal weighted, it's about 18 times. Historically, it's been 17 and a half times forward. So I think what you have to do is appreciate that not only will we see company-friendly, corporate America-friendly policies, but we'll also see consumer-friendly policies if taxes, at least the tax cuts that you and your team implemented, are extended. And so I think all of that is reminiscent of what we saw in the 90s. And so I don't think the Fed needs to cut more, because I think robust stock prices, we've seen it historically, can coexist with higher interest rates as long as you've got productivity. And yes. I do think this administration understands that. I think the president learned from, the not mistakes, but from the cannonballing he got from the bureaucracy last time around. And that's why, to your point, he's moving very quickly and he's making some really bold choices and some really proven choices that I think the market applauds. And not that Scott Bessent cares, but I actually agree with him that we saw the market start to sniff this out in the summer, in the late summer. And I think, that improvement in stock prices and even in the dollar would bode well for the administration or for the election.
Actually, good point. Dollar, almost 106. Dollar's up about 4 percentage points. Gold has had a big run, but it's slowing down now. Gold is slowing down. And the oil prices are slipping. I mean, they're around 70. We want to get them down to 35. Let us take a break. We'll talk about liquid gold. We'll talk about real gold. We'll talk about all kinds of gold, talk about the Trump trade. And I have a little irony because I think Trump's tax cuts have been the best thing for Joe Biden in 2023 and 2024. It's just that Biden wouldn't fess up to it. Folks, we're talking to Jim LaCamp of Morgan Stanley. We're talking to Nancy Tengler of Laffer Tengler Investments. I'm Kudlow. It's all about the Trump trade. Be right back.
This is the Larry Kudlow Show. Now, back to the Larry Kudlow Show.
We are talking about the Trump rally and the stock market and other matters. We've got Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments, and Nancy's latest book is The Women's Guide to Successful Investing, and my old pal Jim LaCamp, Senior VP Investments at Morgan Stanley. Jim LaCamp, down there, more or less in the oil patch, what are you thinking about oil prices? What do you think? Do you think the rig count's going to go back up? Do you think they'll stop being money managers and start being oil men again, or what's going to happen?
Yeah, it's really interesting. The rig count's still down. Didn't even come back up after the election. In fact, it's down not only over the last year here in the U.S., but it's down internationally. The good news is that production has remained high, and that's fracking and other new technologies. But the thing is, you have to increase the rig count because you're going to have depletion on the, even if you're getting more out of these wells and rigs, you're going to have depletion, and we need power. If you can't sell the artificial intelligence story without having the power, that's the massive amounts of power that's attached to it. So that's why some of these utilities have done well, and why some of the natural gas companies have done well, and natural gas prices have started to increase. I think the LNG play is a big play for investors in here, as Trump will start supporting that instead of fighting against it like Biden did. And I think oil prices go up for a couple of reasons. Even if we have an increased, if we start increasing the rig count again, I think the economic growth story here, Argentina, India, and maybe even some growth in China will mean more energy usage. And you couple that with the absolute huge power demand for AI, you're going to need supply. I think the rig count goes up. I think prices go up, but go up in a good way because of growth, not because you have a president that's shutting down federal leases, et cetera. I think they go up because of growth.
There'll be a lot of reopening of federal leases, a lot. And by the way, it's being discussed in the transition as a revenue raiser, a royalty raiser. And that's a very interesting point. That's a good rundown. So, Nancy Tengler, $2 gasoline, I'm going to have to wait longer? Is that the idea?
I hope we get there because, as you know, I drive an F-150, so it would be nice to...
Well, my Lincoln Navigator, gas guzzler, right. I'm proud of it.
Hey, I think one of the things that we have to pay attention to also is if we do get a corporate tax cut, down, let's just say from 21 to 18%, that could boost earnings 3 to 4%. And that means, that multiples then come down. So I think we're looking at that. Our Trump trade, we've been trimming it lately, has been Tesla. Who would have thought that stock's up almost 40% since the election? But I think it's this administration is going to be friendly to technology, friendly to financials, of course. And I think if we can get some decline in interest rates, we'll start to see the industrial manufacturing sector really take off. Because Jim, I'd love your thoughts on this. I saw that CapEx spending in the oil industry has actually now gone back up and crossed over cash return. The money management side, as Larry called it, cash return to shareholders. I don't know if you're seeing that, but that was one of the things I read. That would be encouraging.
If you talk to people, and I do every day, I talk to people in the patch, and there's a level of excitement that we haven't seen in quite a while about what to do next. And interestingly, they're a lot better at it, at finding it and knowing where to drill than they were even 10 years ago. Artificial intelligence is a big part of that. Yeah. But now with the AI, half of these oil fields are being used for data centers and for power and crypto mining and all of these things. Crypto mining. Yeah, so there is a ton of stuff going on in the patch.
Computer
some
service,
of which is oil, and the rest of it, and water rights are huge out there now too. I mean, if you look at TPL stock, and I'm not telling anybody to buy it; it's made a gigantic run, but part of that is because of water rights and the whole crypto scene out there and the data.
You got to watch Landman. You got to watch the TV series Landman.
It's the oil here in Fort Worth. A lot of it was shot here in Fort Worth, and
it's the oil version. It's the oil version of Yellowstone.
Yeah, if you look at the golf scene, that's
Nancy Tengler,
and it's
Jim
LaCamp.
LaCamp.
Cars and houses.
You're both
and break
fabulous.
windows.
Thanks, kids.
Thank you.